What's happening, traders? I hope you are well. In this video, I'm going to be discussing how to identify quality zones. Now, zones are extremely subjective. The way you perceive them is not necessarily the way that I perceive them. So I'm not saying that this is how it is. I'm just saying this is how it is according to how I see the market. All right. So the first thing that I am always looking out for is the extremes. Okay, now we're on the NSD USD, a market that's totally out of my parameters. So I just wanted to take a look at this. Let's go back into the past and then let's come back into the present. So right now we are looking at, what's this? We are around September 2015. So let's just take a look at the extremes on this occasion, right? So we have a massive drop, base, and we have a rally. So let's just mark off this extreme here, all right? One extreme there. Then we have a rally, base, and a drop. So let's just get that extreme. Now, just looking at these two extremes, we can have, there's room for potential when the market decides to come back to both of these extremes, right? So let's just take a look. We got this, first of all, we've got this drop base rally, then we have a rally base drop. The market then decides to come back to this area at this rally base drop, and then the market proceeds to fall drastically. And then when the market comes back, so let's just mark that off just so we can clearly see it. So there. Boom, so the market comes back into their area, drops, and then the market drops down back into this area of demand. And we can see the market then continues to rally. All right. So this is about as exciting and as simple as it gets to what I'm looking for when it comes to extremes. Now, on the daily chart, the extremes are easier to perceive. The lower down you go on time frames, it's harder to perceive the extremes because everything starts to look like an extreme, right? But from the context of the daily chart, we can clearly see a massive decline in price. We've got a drop, base, a rally, base, and a drop, and a rally into this rally base drop, and then the market drops down into this drop base rally, and boom, decides to move out of there. So let's continue on and see what's happening. So the market just continues to do its thing. Again, it's doing this thing. Come up here, we've got, there's no point looking all the way over to the left here right now. I mean, we could do, but let's just keep it in line with what's happening at the current time structure. So market's moving up. Still nothing that's extremely clear here, to be honest with you. And then we've got something that, provides a little bit of interest. Now, the reason being is that, number one, it has broken a previous low over here. And has also broken this low over here. Oh, was that the wrong one? Yes, it definitely was. Let's just get rid of that. Use that trend marker. Pull that over here. Okay, cool. So we've got an extreme, another extreme that has presented itself. And by the way, this was in a sideways movement. If we just get this box here, right, we can see that from here, or really from here. This was in a channel the whole time, right? So depending on if you perceive that, yes, you could have traded the bounce and so forth until it broke out of this particular channel, right? Let's just get rid of that. So this here is the level, this rally. Let's just zoom in a little bit. So we've got a rally, base, and a drop. that broke one low and the previous low on the daily, and then the market decided to come back around to it. Let's just draw this in here. Again, another extreme, right? And back down here again, we have another extreme. Let's just get rid of these two lines now. Right, so we've got a drop, base, and a rally, and we have the market moving into that and then moving out again. This time it wasn't as strong, even though we have a clear, really clear pattern in terms of a profit margin. The market decided to move deeper. And see, guys, you know, even though we may have that clear profit margin on the daily, the market still decides to do something else. It decided to go deeper, right? Deeper into this area here. What is here actually? Let's have a look. What does that look like on a weekly? Let's just take a quick look actually. So even if we looked at this area here, still didn't touch it before it decides to come back up again. So again, you know, we're just running blind. So the market's not even doing anything that we can actually substantiate and say, this is why it's doing that, okay? It's just doing whatever it wants to do at this point. Institutions are in control. They know what they're doing. We're just trying to follow along, right? So let's just continue. Again, we have another extreme up here. Okay, nothing. I mean, my picture's there, but the market doesn't even come up there. It comes up to this area here. We could potentially call that, you know, if we decided to look at it from an event, supply and demand chain event perspective, we could like look at this and say, okay, look, you know, market came into that zone. Let's get rid of that. Market dropped into this zone. Let's just zoom in so you can see that. Market dropped into this zone here, didn't break it, but then it formed another drop base drop, and that's what broke through this particular zone on the daily, and the market then decided to come back to it. Let's draw that in there, and as we can see, put that in red, it touched it perfectly and then dropped out of there again. Okay, so let's just get rid of these. Let's just keep that extreme in there. And the market then continues to drop drastically. Then we've got another extreme over here. Let's move over. Drop, base, rally. Again, another extreme up here. And as we can see, the market then moves into this extreme area and moves up a good few pips, but then we've got an area blocking it before it gets into this clear path. So we can just draw that in there just so it's clear. But again, the market does not even make it. It barely touches that, right? And then falls away. And the market decides to go even lower, lower, lower. And then we have another extreme down here before the market decides to rally up. And then we've got extreme up here. So right now the market is about to move down into this extreme zone again. So more than likely we can assume that there could be a possible push to the upside as the market enters this extreme. So from the context of a daily outlook, it's very clear to see the extremes of the market, and we can see that sometimes, you know, the market doesn't even come into the extremes into our zoning level the way we look for engulfings. You know, the market does its own thing at certain times, but most of the times, if we can clearly see, it applies to all of these extremes, right? But on the daily chart, you need to have some extreme patience to actually wait for these extremes. Yes, you can use the supply and demand event chain to get in while these rallies are occurring to the upside. Okay, depending if you can see the profit margin on the daily, right? If there's a lot of engulfing candles, for instance, if you're taking, for instance, like, let's take a look at this right here. If there's an opportunity to get onto this run up here, we can see that number one, there isn't really much in terms of supply up here until we get around to say this level or this level here. Why? Because we've got large profit margin here, right? And there's not much here either in terms of something that's going to cause resistance to the market moving up. Okay, so we're just looking for the extremes. And again, this is much easier to see on the daily chart than it is on, say, like the 4 hour or the hour, because the lower down you go, as I said earlier, everything begins to look like an extreme level. And something I just wanted to mention as well, guys, that if you go into the description, you'll notice that there's a few links there to a few courses on trading psychology. I've had a mentor now in trading psychology for the past 3 to 6 months, and it has been absolutely game changing for me. It's not really about tactics and strategy. It's more about your actual relationship with money and, how you perceive it, how you view it. My coach has worked with financial professionals, independent traders, fund managers, leaders, entrepreneurs, all sorts. So if you're interested in getting your head right, which is basically 90% of the game, take a look at those courses. There's something there for like beginners, depending on where you are, intermediates, and slightly more advanced. I have to say that once you start getting into like Mind Metrics and Compass, it will get uncomfortable because things will come to the surface that you didn't even know was there, and things that you aren't even aware of. And it's insane how deep this stuff goes. And Rich is absolutely amazing and on the top of his level when it comes to trading psychology. He's got a website called Mind Muscles for Traders, so make sure you check that out, see his experience and stuff, and just take a look, because once you get your head right, trust me, it makes everything 10 times easier. So with that being said, this is what I look for when I'm trying to identify quality zones. I am looking for the extremes. Now, guys, this is part 1 of 2 videos, because in order to really bring this together, the next video I'm going to discuss how to identify the qualifying engulfing candles. And once you see that video, it will make this whole thing so much clearer for you. And that will be coming up in the next couple of days. Speak soon.